Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. Okay, the first one is the GDP month over month related to United Kingdom, and we're going to focus on GBP USD currency pair. Next we have is the trade balance related to Europe, and we're going to discuss the euro dollar currency pair mainly. So these are the previous week important financial news events. Let's look at further details. The first one is the GDP. M over M means month over month, and the news came out on February 12th at 7 a.m. UTC time. Now, what is the GDP M over M? The GDP M over M measures the month-to-month change in the total value of goods and services produced in the United Kingdom, reflecting short-term economic performance. A stronger than expected reading usually supports the GBP and can push GBP/USD higher as it signals economic expansion and improving business activity. A weaker than expected figure may pressure the GBP and drive GBP/USD lower, increasing market volatility and downside risk. Now, the previous number was 0.2%, forecast was 0.1%, and the actual number we got is 0.1%. The United Kingdom GDP month over month came in at 0.1%, matching market expectations. Despite the financial data confirming a slowdown in economic growth, GBP/USD moved higher following the release, indicating that traders interpreted the result as less negative than anticipated. While the headline figure pointed to weaker growth compared to the previous month, the absence of the downside surprise provided relief to the Forex market. Expectations had been leaning cautious, and the inline result reduced fears of a sharper economic slowdown. This led to renewed buying interest in British pound, pushing GBP/USD higher after the news announcement. Let me show you the chart of GBP/USD currency pair. This is the chart of pound dollar currency pair. So this is where the news came out and market tried to rally back up over here. Now, why GBP USD moved up? Even though the financial data meet expectations, the market reaction was bullish for GBP due to the positioning and sentiment. Key factors behind the upside move included relief that GDP did not fall below expectations, reduced fears of economic contraction, market positioning skewed towards downside risk, and short covering and buying momentum after the news release. As a result, GBP strengthened, driving GBP USD higher in the post release session. The key market drivers to observe is the GDP result matching expectations, market positioning prior to the financial release, perception of economic resilience despite slowdown, shift in Bank of England policy expectations, and broader US dollar movement and risk sentiment. The upside momentum in GBP USD might continue if sentiment remains supportive. Further direction will depend on follow up economic data. Bank of England expectations remain a key driver. US dollar strength or weakness will influence continuation. Volatility may remain elevated in the near term. The overall analysis and the key takeaway is although GDP month over month came in line with expectations at 0.1%, the market reaction was positive for British pound. The absence of a weaker than expected print helped ease concerns about a deeper economic slowdown, leading to buying pressure on the British pound and an upward move in GBP/USD currency pair. This highlights how market expectations and positioning can drive price action even when data matches forecast. The final key takeaway is GDP printed at 0.1% in line with expectations. GBP/USD moved higher due to relief and positioning. Forex traders should focus not only on the financial data itself but on how it compares to expectations and market sentiment, as these factors often determine the actual price reaction. The next one is the trade balance related to Europe. Now, what is trade balance? The trade balance measures the difference between exports and imports across the Eurozone and reflects the regional external economic strength. Trade balance shows whether Europe is earning more from exports than it spends on imports, which can influence demand for the euro. A higher than expected trade surplus typically supports the euro and can push euro USD higher, while a weaker balance or trade deficit tends to pressure the euro and may drive euro USD lower, often increasing market volatility. Now, the previous number was 10.2 billion, forecast was 11.8 billion, and the actual number came out at 11.6 billion. So on February 13th at 10 a.m. UTC time, we got the news announcement. The Eurozone trade balance came in at 11.6 billion, slightly below the forecast of 11.8 billion, but still above the previous reading. Despite the modest miss relative to expectations, Euro USD remained largely sideways following the release, reflecting a neutral forex market reaction. Let me show you the price chart of euro dollar currency pair. So this is the price chart of euro USD. Market simply moved sideways over here on 13th of February. Now it's trying to drop over here. The financial data indicated continued strength in euro's external sector, but the lack of a clear upside surprise limited bullish momentum. At the same time, the result was not weak enough to trigger selling pressure on the euro, keeping price action contained. As a result, euro USD currency pair consolidated after the financial news announcement with no strong directional move. Now, why Euro USD moved sideways? The market reaction was neutral as the financial data fell between expectations and prior levels without delivering a strong signal. Key factors behind the sideways movement included slight miss versus forecast, but still a solid surplus, no significant deviation to shift market expectations, balanced sentiment between euro strength and caution, lack of strong US dollar driven momentum at the time. This combination kept Euro USD range bound with neither buyers nor sellers taking clear control. Key market drivers observed: trade balance slightly below expectations, improvement compared to previous readings, stable external demand conditions, neutral impact on European economic outlook, and broader US dollar direction and risk sentiment. Technical and sentiment considerations are post-release price action confirmed indecision in Euro USD. The lack of follow-through in either direction suggests that Forex traders did not view the data as a strong catalyst for a breakout. Liquidity around the release produced limited volatility, with price uh, remaining within established ranges and failing to develop momentum. The overall analysis and key takeaway is, although the trade balance showed an improvement compared to the previous reading, the slight miss relative to expectations resulted in a neutral market reaction. Euro USD remained sideways as the data did not provide a strong enough signal to drive a directional move. This highlights how moderate deviations from forecast may lead to consolidation rather than volatility. Final key takeaway is trade surplus came in at 11.6 billion, slightly below expectations. Euro USD remained sideways due to lack of a strong catalyst. Forex traders should focus on larger surprises and broader market drivers, as neutral data outcomes often lead to consolidation rather than clear trends. Now, let us take a look at previous week global market trends. I'm going to discuss the Euro USD and US dollar Swiss franc. Regarding the euro dollar currency pair, we got this long spike over here, and it's quite possible that price action is trying to drop over here, and we might get a one more bullish drive to the upside. This one is also possible, but for the time being, I would say the price action of euro USD currency pair looks bearish, especially if we take a look at these long wicks of these candlesticks over here. They show sellers are trying to take control of the market. Selling pressure is easily visible over here. The daily chart kind of looks a bit sideways. My forecast is bearish in euro USD currency pair in daily time frame. So price action might try to move sideways. It's possible that market is probably going to waste some time and actually goes nowhere. But overall, the trend is bearish. The 4 hour chart over here, this is where we got the bullish breakout of this trend channel, then a pullback. And after that, I'm expecting further weakness in price action of Euro USD currency pair. Next one is the US dollar Swiss franc. US dollar Swiss franc, the overall trend is still down. So the way I see the price action of US dollar Swiss franc is probably going to move sideways and then expect further weakness in market. And that is the reason I suggested that the euro dollar currency pair could provide us a short-term decline, and then we might get another bullish rally in euro USD currency pair in coming trading weeks. But this is a long-term chart, so it's probably going to take maybe 7 to 8 weeks for the euro to rise back up. But for the time being, the euro looks bearish uh, in a daily time frame. Regarding the US dollar versus Swiss franc currency pair, price action is trying to rise up over here. Okay, this looks like to me kind of a sideways price action going on. If you take a look at a 4-hour time frame, this was the break to the downside, and now market is trying to rise back up over here. So we have a nice resistance over here, and this is the support. So price action is currently moving in between these two levels here. So support is present at 0.7597, and resistance is present at 0.7817 area. Okay, so this is the trading range. I expect US dollar Swiss franc to rise up, and it might stay below 0.7817 area. Okay, so the way I see US dollar Swiss franc is probably going to rise up from current levels, and then we might get a drop in price action of US dollar Swiss franc currency pair. Okay. Next, let us take a look at current week macroeconomic events and data releases. I will be covering the key developments in Forex market with the focus on fundamental analysis. Okay, the first upcoming news announcement is unemployment rate in Australia, and we will get that news announcement on February 19th at 12:30 a.m. UTC time. The next important financial news announcement is the German flash manufacturing PMI related to Europe, and this news will come out on February 20th at 8:30 a.m. UTC time. Okay, so first let us take a look at unemployment rate related to Australia. Now, what is unemployment rate in Australia? The unemployment rate measures the percentage of the total workforce that is actively seeking employment but unable to find work in Australia, providing insight into labor market conditions and overall economic health. A lower than expected unemployment rate typically supports the Australian dollar and can push the AUD USD currency pair higher, as it signals a strong job market and economic stability. A higher than expected reading may weaken the Australian dollar and drive AUD USD lower, indicating economic slowdown and potential pressure on consumer spending. So on February 19th at 12:30 a.m. UTC time, we will get the news announcement. The previous number was 4.1%. Forecast is 4.2%. The actual data is going to be released on February 19th. Australia's labor market data remains a key driver of currency valuation as it directly influences expectations around economic growth and central bank policy. With inflation pressures and global uncertainty still present, the strength of employment data plays a critical role in shaping market sentiment towards the Australian dollar. The forecast indicates a slight increase in the unemployment rate, suggesting a modest softening in labor market conditions. Forex traders are closely monitoring this release to assess whether the economy is maintaining resilience or showing early signs of slowdown. Now, if the unemployment rate prints below 4.2%, this would indicate stronger than expected labor market conditions. Australian dollar could strengthen as confidence in economic stability improves, potentially pushing AUD USD higher. If the unemployment rate prints at 4.2%, this would align with expectations and reflect a mild cooling in the labor market. Market reaction may be limited, with AUD USD direction influenced more by broader US dollar strength and risk sentiment. If the unemployment rate prints above 4.2%, this would signal weakening employment conditions. Australian dollar may come under pressure as concerns about economic slowdown increase, potentially driving AUD USD to the downside. The key market drivers to watch: number one is the deviation from forecast and previous unemployment rate, changes in labor market strength in Australia, implications for central bank policy expectations, overall economic outlook for Australia, and US dollar direction and global risk sentiment. Labor market data is a leading indicator of economic strength, often influencing both short term volatility and medium term trends in currency pairs. Technical and sentiment considerations. AUD USD price action ahead of the financial release may reflect cautious positioning as forex traders reduce exposure before key economic data. Volatility is expected to increase around the release, especially if the result deviates from expectations. Sharp price movements, false breakouts, and quick reversals are common during employment releases, making disciplined execution essential. The overall analysis and key takeaway is the upcoming unemployment rate release is expected to show a slight increase to 4.2%, suggesting a mild softening in Australia's labour market. The market reaction will largely depend on whether the data confirms these expectations or delivers a surprise. Any deviation from the forecast could shift sentiment quickly and drive significant movement in AUD USD currency pair. The final key takeaway is markets expect unemployment to rise slightly to 4.2%. AUD USD reaction will depend on whether the data beats or misses expectations. Traders should stay alert for volatility and focus on how the data compares to forecast, as this will determine the strength and direction of the market reaction. Next one is the German flash manufacturing PMI. Now, what is German flash manufacturing PMI in Europe? German flash manufacturing PMI is a preliminary indicator that measures the level of business activity in the manufacturing sector in Germany. Based on surveys of managers, it provides an early signal of economic trends, whether a reading above 50 indicates expansion and below 50 indicates contraction. A stronger than expected PMI supports the euro and can push euro USD higher as it reflects improving manufacturing activity and momentum. A weaker than expected reading may pressure the euro and drive euro USD lower, signaling slowing industrial activity and weakness. Now, on February 20th at 8:30 a.m. UTC time, we're going to get the actual number. The previous number was 52.4. Forecast is 52.5. The actual data is going to be released at 8:30 a.m. UTC time on February 20th. Germany's manufacturing sector is a critical driver of the Eurozone economy and Euro sentiment. Flash PMI readings provide an early indication of industrial momentum, guiding expectations for growth, trade, and central bank policy. With global demands, with global demand trends and supply chain pressures still shaping activity, the forex market is watching closely for signs of resilience or weakness. The forecast suggests modest expansion, slightly above the previous reading. So, forex traders are positioning cautiously as even a small deviation from expectations could influence euro dollar and broader euro flows. Now, if the PMI prints a number above 52.5, this would indicate stronger than expected manufacturing activity and euro could strengthen, pushing the euro USD higher as optimism about German industrial momentum grows. If PMI prints at 52.5, this would align with expectations, suggesting steady expansion. Market reaction may be muted, with Euro USD direction driven more by US dollar strength and broader risk sentiment. If PMI prints below 52.5, this would signal slowing industrial activity and potential economic weakness. Euro may come under pressure, potentially driving Euro USD lower. The key market drivers to watch is the deviation from forecast and previous PMI reading, signs of industrial strength or slowdown in Germany, implications for Eurozone growth and ECB expectations, US dollar performance, and global risk sentiment. Momentum and trends in key German manufacturing sectors. Flash PMI data often sets the tone for broader European economic sentiment and can influence short term currency flows. Overall analysis and key takeaway is the upcoming German flash manufacturing PMI is expected to show modest expansion at 52.5 number, indicating continued growth in the industrial sector. Market reaction will depend on whether the data confirms expectations or delivers a surprise, with potential implications for Euro USD direction. Even minor deviations could shift sentiment quickly, emphasizing the importance of monitoring the release closely. The final key takeaway is forex markets expect PMI at 52.5, signaling moderate expansion. Euro USD reaction will hinge on whether the data beats or misses expectations. Forex traders should stay alert for volatility and focus on how the actual reading compares to forecast. And this will determine short term price action and market sentiment. Next, let us take a look at current week global market trends. We are going to discuss about the Euro USD and the Australian dollar versus United States dollar currency pairs. So let's start with the euro dollar. The euro dollar, like I've said earlier, is probably going to drop first over here and then expect further upside. Regarding the Australian dollar currency pair, we got this bullish breakout over here, and now market is trying to create some spikes over here. If you take a look at a daily time frame, market is trying to slide down over here a little bit. Here's the 4-hour chart, and we got this trend line break actually. So this is where we got a breakout. So right now you can notice that we got this bullish rally and then a big washout to the downside suggests that price action actually wants to go down over here. If I zoom out a little bit, uh, the way market is behaving, I expect for the weakness in price of AUD USD currency pair. So right over here, Aussie dollar, the way I see market is probably going to drop from current levels. Okay. Next one is the US dollar CAD. USD CAD currency pair, weekly time frame, it's trying to turn sideways. We got these long spikes over here. This was the support, so I would say just a false break to the downside, and market now wants to go up over here. And if we take a look at the daily time frame, this is the daily chart of US dollar versus Canadian dollar currency pair. And the way I see, we got a bullish rally, then a pullback, and now market is trying to rise back up over here. Okay. So overall, I see short-term strength in US dollar. Okay. So USD CAD is probably going to rise up over here. Next one is the spot gold. Okay, let's take a look at spot gold. Spot gold, this was a nice uptrend going on inside XAU-USD pair. We got this nice bullish rally, then a pullback, and here's a break to the downside. So this thing is telling me that spot gold is probably going to print one more drive to the downside. However, we might get first a bullish rally. So over here, I expect a bullish rally in gold, and then price action is probably going to drop over here in XAU USD pair. Okay, so this is what I'm looking. I expect a bullish rally, and then market's probably going to drop over here in XAU USD pair. Okay, if you guys have any questions or comments, feel free to type inside the chat box, and I will be happy to answer your questions. So what we have learned today, we discussed about the unemployment rate in Australia, and then we also discussed about German flash manufacturing PMI in Europe, Euro USD, AUD USD, USD CAD, and spot gold. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, February 24th, 2026 at 12 p.m. UTC time. So that's pretty much it for the time being from my side. Have a nice day and bye-bye.